Big Bay Energy. Big Bay Energy. You know it's serious when Forex Bay on the charts. Look left to get right. Read between the candles. Yeah, read between the candles.
What's up, everybody, and welcome back to Read Between the Candles. I'm Chanel Hill, aka Forex Bay, and this is your daily recap where we break down what happened in the market today as well as prepare for the next trading session. We'll take a look at Bay economics, mark up our charts, map out a few scenarios, as well as wrap things up with a little Bay state of mind. So let's get into it. Welcome to Bay Economics. What's moving the money today? Let's get into it. Today's headline came from Canada, where inflation ran hotter than expected. Canadian CPI month over month came in at 1.0%, beating the 0.7% forecast and the previous reading of 0.4%. Common CPI also increased to 2.7% above expectations. Bay translation, prices are still rising faster than economists expected, which would make it harder for the Bank of Canada to justify cutting rates anytime soon. That's generally supportive for the Canadian dollar. Meanwhile, over in Europe, all eyes were on ECB President Christine Lagarde. Lagarde reiterated that the European Central Bank remains data dependent, meaning future decisions will be driven by incoming economic data rather than a preset plan. She acknowledged that inflation has eased, but the ECB is still monitoring risk before making any major policy shifts. Bay translation, the ECB isn't declaring victory yet. Inflation is cooling, but they're still keeping an eye on the data and one eye on the economy. The big picture. Today's story was all about inflation and central banks. Canadian inflation came in hotter than expected, while the ECB reminded markets and future decisions will depend on what the number says next. When inflation speaks, central banks listen. And when central banks speak, the market moves. And that's your Bay Economics update. Now let's see what the charts had to say. Okay, starting with the weekly chart, gold remains bearish overall. We're still trading beneath the major weekly lower high structure and sitting near the lower portion of the current range. Price is currently hovering around 41.71 level, which continues to act as an important support area. As long as we remain below the weekly resistance zone overhead, the broader bearish narrative remains intact. Bulls managed to slow the decline, but they haven't changed the trend yet. The key question here is simple. Can buyers defend support and build a base, or will sellers continue pushing towards lower prices? Moving down to the daily chart, we're seeing a similar story. Price recently tapped into a major daily support zone and has started showing signs of stabilization. After several weeks of consistent selling pressure, the market finally found enough buyers to stop the immediate decline. However, this doesn't automatically mean the trend has changed. For the bulls, the objective is to start reclaiming nearby resistance levels and build higher highs and higher lows. For the bears, this could simply be a pause before another leg lower. Right now, the daily chart is in a decision-making area. On the 4-hour chart, price remains bearish but is currently consolidating. After the sharp sell-off, gold found support around 41.25 to 41.40 region and has been attempting to recover. We could see price trading between nearby support and resistance levels rather than trending strongly in either direction. The immediate resistance sits around 42.08 level, while support remains near 41.71 and 41.39. Until one of those levels breaks, we're essentially watching a market that's building energy for its next move. On the 1-hour chart, the structure is beginning to flatten out. After the aggressive sell-off last week, Price has transitioned into a sideways range. Buyers and sellers are currently battling between roughly 41.71 and 42.08. This is where patience becomes important. When markets consolidate, they're often preparing for an expansion. A break above resistance could open the door towards higher retracement levels. A break below support could signal that sellers are ready to continue the larger downtrend. Finally, on the 15-minute chart, we can clearly see today's consolidation. Price spent most of the session rotating between support and resistance without establishing a clear directional bias. The market respected both sides of the range and ultimately closed near the middle of it. This tells me that neither buyers nor sellers were fully in control today. For tomorrow, I'll be watching for a breakout of this intraday range. Until then, this remains a wait and see environment. So here's my takeaway. The higher time frames remain bearish, but the lower time frames are beginning to stabilize after the recent sell-off. Right now, gold is sitting at an important crossroads. Support is holding, but resistance hasn't been broken. That means tomorrow's price action could provide valuable clues about whether this is the start of a deeper retracement or simply a pause before continuation lower. As always, don't predict the move, let price reveal the move. And that's today's markup. Today's base state of mind. Trading isn't about proving yourself right, it's about responding to what's actually happening. The market doesn't care about our opinions, predictions, or expectations. Our job is to read the story price is telling and act accordingly. Read the candles, not your emotions. That's today's read between the candles. If you found value today, don't forget to like, subscribe, and share. Until next time, manage your risk, master your emotions, and remember, we don't just watch candles, we read between them.
Big Bay Energy.